Traditional venture capital operates like a failing industrial sorter, pulverizing the vast majority of raw material and discarding it into the dark. The industry protects this massive inefficiency through the power law, a concept that frames an 80% failure rate as a natural financial feature. In this model, the system requires the death of most startups to function. For one glowing node to reach the bottom, hundreds are treated as expendable fuel. Founders' sweat equity is burned off, discarded as statistical duds. Raking away massive losses to subsidize one wild win works for a casino floor, but lacks strategic investment logic. The immediate cost falls on the entrepreneur. You trade away massive portions of your equity for a mere 10% chance of becoming a statistical hit in a crowded portfolio. They label this risk capital, but traditional VCs rarely calculate or manage the dichotomy of risk. They simply engage in a blind, probabilistic gamble and wait for the results. This legacy model has left a vacuum for a financial system built on mathematical precision, one where founders are no longer treated as fodder for a high-risk gamble. Moving from the casino model requires a pivot toward calculated engineering. Vector Capital Partners focuses on venture debt financing. This model allows founders to retain their equity while utilizing capital that behaves with predictable financial parameters. This pivot is facilitated by the unified Sigma platform. It serves as a mechanical framework designed to strip out the guesswork of traditional funding and replace it with mathematical determinism. By moving away from equity speculation towards structured venture debt, the focus shifts from hitting a lottery ticket to meeting defined repayment milestones within a rigorous framework. Traditional marketing relies on carpet-bombing multimedia channels. Companies burn cash on rudderless advertising, hoping a fraction of the noise reaches a customer. The Sigma engine targets zero CAC, the total elimination of marketing waste. We achieve this by utilizing captive digital communities within the IMEN ecosystem. User attention stays inside a protected boundary, allowing value to compound without the friction of external customer acquisition. Trapping value within a captive ecosystem neutralizes the primary cost of growth, creating the first stage of the engine's operational efficiency. Where standard AI mimics human conversation, the unified Sigma platform uses thinkbots to automate business logic and drive specific, calculated outcomes. These thinkbots are engineered to perform high-level tasks that directly impact the bottom line, rather than simply simulating a chat interface. The unified Sigma platform acts as the mechanical engine, while vector dynamics provide the operational fuel, aligning every business variable toward a single, definitive target. When thinkbots operate through these dynamics, every movement is measured by exact magnitude and direction, ensuring the entire system moves with synchronized speed. This shift creates a visible change in the business landscape, moving from the clouded uncertainty of the old model into sharp geometry of engineered finance. Risk is redefined here. It is no longer a blind gamble, but the strategic juxtaposition of threat and opportunity, a set of variables to be measured, balanced, and leveraged. By integrating acquisition, operations, and funding into a single stack, the platform identifies and isolates the friction points that typically derail a startup, moving toward a model of virtually integrated innovation. For entrepreneurs tired of being fodder for a VC's portfolio, there is a choice. Your sweat equity doesn't have to be the fuel for a system designed to fail you. The vulture model is failing. The Sigma BankAI engine is operational. It's on.